Hi guys, Lee here from Trading College. Hope you're well. On this video, we're going to look at 2 times that I would never enter a continuation trade. So hopefully this video is going to save you some money because when I'm teaching new traders, this is the things they don't do. Okay, so we're looking at real-time DAX trade on the 5-minute chart here. And of course, we're technical analysts, so we're looking at charts all the time. This is where we're making our trading decisions. Now, you can see the DAX in the European session. We got a really nice sell-off this morning. Markets pushed very nicely to the downside. And by the way, what I'm going to talk about here, it can happen on any time frame, whether you're using a 5-minute DAX or you're trading gold on the monthly chart. The same principle applies for you with this chart pattern. Okay, so as the DAX sells off here, it's gone lower. Okay, and some people would have been short in the markets around this red pro trading system. Now, as we start to push lower here and continue to push lower, you've got to have a momentum indicator on your chart, because for me, the momentum indicator in this case is our storyteller. Gives you the heads up when the market could reverse. Okay, now as we make a new low, we could call this wave 1 down. Okay, I'm not talking about Elliott wave counts here at all. I'm just talking in general about markets making waves after waves. Okay, so the market pushes down this morning. We get a nice European sell-off. In fact, we were looking at for this last night on our scan club. So we make a low, which is 1. Okay, now the market rallies higher here. We have a retracement. All right, so the market is pushing back up. Now, this trend isn't over yet because we make a new low and we break down. Now, some people call this a breakout. We see people shorting it at the breakout zone here. Okay, interesting place to enter a trade short. But as we make a new low, as soon as I see that and the momentum indicator is higher than the previous low, it's the heads up that we could see a reversal. Now, we call this divergence in technical analysis. Now, the market pushes higher a little bit for several candlesticks. Then we make a brand new low here and the storyteller is higher. So now we have 3. Okay, so when we get 3, there is no way within this zone here am I going to take a short continuation trade to the downside. Probabilities state that we could have a bit of a rally because we've got a 3-wave divergence that could kick the market back up. I don't want to be the last one into this trade. I don't want to be the one that buys or shorts the bottom of this market for it to rally higher. And I know people out there will be saying, well, divergences don't always work. Of course, no strategy always works, but it gives you a heads up that we could see a reversal back up here. So I would never short here and short here. If anything, I'm shorting on the first move down and then potentially on the pullback here, depending what the daily time frame does. Remember, if I'm day trading, I'm looking at the daily chart, seeing where that support and resistance is, and so on. So this is divergence, and we call this a 3-wave divergence. Now, let me show you crypto traders out there. I'm going to type in Bitcoin here. And I'm going to prove to you and show you it happens on absolutely every time frame. Okay, so let's have a little look at the Bitcoin chart on a daily chart. Now, Bitcoin starts, we see, in fact, this was major divergence and a bottom being formed here with a 1, a 2 and a 3. The market pushes higher. Okay, so when I'm saying the market, I'm meaning the instrument that we're trading. As we start to push higher, we make higher highs and higher lows. But hang on a second, as we break above this recent high, we're getting a 1 and a 2, and then we retrace maybe to a fib area, and then we make a new breakout and make a new high. Now we have a 3. I would never go long this market here. Look what happened to Bitcoin. Was it 52.5 to 53,000? We're down to 42,000 from that very same pattern. So I'd never enter the trade to the long side at that time. What would I do? Maybe look for something else that's not doing that pattern. But I would certainly not be entering a new continuation trade in that direction. I said I'd show you 2 examples of when I would never enter a trade. Let me show you another one, guys. So I've jumped up to the 4-hour chart of the German DAX. Now, as I said, make sure you've got a momentum indicator on your chart, because that is going to save you money and pain. Now, I'm looking at a 4-hour time frame here, and this, what I'm saying here, it's applies to every single time frame. When we see a market, the markets don't go straight down forever. Also, the markets don't go straight up forever, unless maybe you're trading some commodities at the moment, like coffee and so on. But as this market pushed down here, look at the storyteller. It starts to get mature. I call it mature because it's starting to get to the end before it's going to reverse. So I'll never short it here when we get down to the the momentum. Yes, it could go another several candlesticks, but I want to trade with high probability strategies. I want to trade in areas on a chart where I get in the move much earlier. Let me give you an example, a live example that's taking place right now. Here's crude oil. Now, let's just scrunch the chart up a little bit here on crude, just to show you what I mean by a mature momentum indicator. You can see here, look, the storyteller fired momentum a while back on, I think it was just over 22nd, 23rd of September. And you can see where we're trading now, that we're right up at $76. Could we go to 77? Yep. Could we go to 78? Yep. But look, when we start to get mature, we come down for several candlesticks, and those candlesticks could last several days. So you don't really want to be the last one into that trade, okay? When you see a mature momentum indicator, when it's peaking, when it's gone several hours to the upside or to the downside. Go and find something else that's setting up, because the risk reward on this is much greater, okay? If you get in on the early move, you want to get in on the early move, risk reward is much better. Here, if I'm buying it here, I'm trying to squeeze those last drops out the trade. It's going to have, as you know, as a technical analyst, the market goes up, back, up, back, up. You don't want to be buying this area here, this area. You want to be looking for the pullback and the turn, the pullback and the turn, and maybe selling it up here to somebody who's buying it and chasing it up there. Okay, guys, hope it helps. Hopefully gives you a little bit of direction here. But yes, it could continue for another few candlesticks, but the chances of you getting great risk reward dramatically decrease. Okay, so if you like the videos, make sure you give us a thumbs up. Please make sure you subscribe to the channel. It helps us grow the YouTube channel. Come and check out our website as well. We've got loads of free stuff on there, and I'll speak to you soon. Take care now.